Hi, everyone. My name is Ron Finberg. So first off, I want to say thank you to the IFX and Virtual Vision team for giving me the opportunity to participate in today's regulation panel. A little bit about myself. I'm a regulation specialist at Cappitech, where we provide technology to investment firms such as CFD brokers, help them with their transaction reporting around the globe. So I'm excited about today's panel and believe it is set up to provide a lot of value to the listeners today. Along with me today are a very knowledgeable set of panelists with expertise of numerous areas of regulation around the world. Before we start, I want to remind everyone that if you have questions, you can enter it into the chat box and we will aim to get to them during the panel. In addition, if we do not get to them during the panel, they will be on the digital side, and the panelists will be able to comment on them throughout the rest of the day. So you can keep checking there to see if your questions were answered. So to start things off, I'm going to let everyone introduce themselves. So going from my left to right on my screen, we'll start with Sophie.
Hi everyone, my name's Sophie Gerber. I'm the co-CEO of Traction Fintech, which is a business that does regulatory transaction reporting, similar to what Cappitech does, where Ron works. And I also run a business that does regulatory consulting in Australia for ASIC regulations. So we help people with getting financial services licenses and maintaining their licenses going forward once they've got that from ASIC.
Thanks. Evdokia?
Hello, everyone. Thank you, first of all, for the invitation. I'm happy to be here today in this new setup. I'm the Risk and Compliance Director at Salvus Funds. I'm based in Cyprus. We specialized on regulatory consulting, compliance, risk management, and audit for investment firms, funds, EMIs. We specialize in the EU regulatory perspective, but glad to have clients around the globe. Thank you for today.
Thanks. Next, Tom.
Yeah, hi, good morning, everyone. My name is Tom Wieczorek. I work in product management, Stock Exchange's regulatory reporting arm or firm, and we provide regulatory reporting services. I think for the purposes of this panel, we'll concentrate on the EMIR Trade Repository and the MIFIR arm service.
Thanks, Tom. And Mark?
Hi, everyone. Good morning. My name is Mark Kelly. I've got a background in regulation and technology as a programmer way back, and I've spent the last dozen years helping clients in various enterprises report correctly to regulators for their EMIR transaction reporting. The last significant role was as Director of Professional Services in Abide, which is shortly to close. And then I had a little sidebar after that as Head of Compliance in the UK branch of Coinbase, the crypto firm.
Thanks, Mark. Okay, so to get things moving, Sophie, we'll start with you since I think you're the furthest away from everybody in Australia. Maybe just if you can give us a little bit of update on what's going on there, any new happenings from Australia in terms of regulation over the past 6 months. You know, there's been some talk about changes to leverage and who you can onboard clients from.
Yeah, so last year in August, there was a consultation paper released which is proposing to put leverage restrictions on retail client trade, similar to what was done by ESMA in Europe. The leverage restrictions that that ASIC proposed are a little bit lower than what ESMA has put in place, which was a bit of a shock to many people in the market. So there's been a consultation around that. We understand that ASIC has received quite a lot of feedback, even though there's only 60 market makers in Australia. They've received at least over 400 pieces of feedback. We have seen a report that came out during coronavirus, which talked quite extensively about client losses for trading on CFDs, especially during the market turmoil back at the beginning of the virus. So it does seem that ASIC haven't dropped the issue, despite it coming up to a year since they released their consultation paper. And they certainly haven't indicated in their revised priorities, since they released revised priorities based on what's happening with coronavirus, but the delay of this consultation paper and the leverage restrictions wasn't included in that. So they're not ruling it out. So I think we can still expect to see that come through probably sometime before the end of the year. And I think the other point to note about this is that there had been some avenue for court challenge, and one of the previous product intervention orders which ASIC put in, which was in relation to short-term lending, went before the courts by way of a challenge, and just recently the court ruled that product intervention would stand. So that's probably given ASIC a bit of a confidence boost to go ahead with their product intervention. Just quickly, in terms of other regulations that came in, there has been a narrowing of the definition of wholesale clients. So in Europe, that's the same as sort of a professional, sophisticated investor. So there's been a narrowing there, some narrowing around reporting of LEIs in trade reporting. And then it's coming on 2 years now. There's been some restrictions put in, or just some guidance around onboarding foreign clients. So participants are on notice about onboarding clients from places where they're not allowed to do that. That's a quick summary.
Have there been any policies against people? Any penalties for some items you mentioned in terms of like the client onboardings?
There hasn't been anything that I've seen, but what we're seeing is that there's just a general pushback from ASIC on a number of fronts. And one that I should mention in terms of new rules which have come in is that if you don't use your license for 6 months, ASIC now have the power to cancel that license. So we've seen a number of people get emails from ASIC asking when they're going to start business. And I think that 6-month period since the legislation came in is coming up in the next couple of months, and I would expect to see ASIC move to shut down any market maker AFSL that isn't currently trading with clients. And there has been some general enforcement action against a number of providers. So many people will have seen that Forex CT has lost their license, and there's 2 actions still pending, one against AxiTrader and one against Olive Financial Markets, which we're waiting for an outcome on, and a couple of other pieces of litigation against providers still going, which is quite a serious nature. So there's a lot of people under pressure from ASIC at the moment.
That's a good point. I want to come back to that in a moment. First of all, let's go to Evdokia. So maybe you can give a little background on if there's anything new coming out from Cyprus, from CySEC this year that firms should be aware of.
Sure. First of all, we have seen CySEC keeps going, issuing a series of updates and new circulars directives. We know by now that CySEC is proactively encouraging firms to ensure compliance with the regulation. The main objective of CySEC actually is to ensure the establishment of high standards, firstly for investor protection and the application of the best practices by all obliged entities, not just investment firms, but funds and everyone that CySEC supervises. During the last month, specifically, we have seen CySEC enforcing fines to investment firms. We have seen suspension of licenses, imposing personal fines to individuals, and prohibiting them to actually exercising their professional activity, which is quite serious. These decisions, of course, were a result of many inspections by CySEC and complaints by investors. And we all know when complaints come by investors, CySEC and all the regulatory authorities need to go and inspect the specific firms. CySEC put a lot of emphasis and the actual fines on the MiFID II the leverage restrictions, compliance is needed for best execution, and anti-money laundering. On anti-money laundering, early this year, February, CySEC started examinations for AML for all the appointed compliance officers. And it's a new thing actually from CySEC because all people being in the compliance now and actually dealing with AML, they need to have the examinations, which is good because we are taking money from clients, so we have to know the duties, the responsibilities of what we do. Further than that, CySEC was very, very collaborative.
If I can ask you on that, on the point about the AML test that people need to take, is that a lengthy process? So if there's a broker that they might have a compliance person that hasn't passed that, is that something that will take a long time for them to get?
Actually, CySEC gave a whole year for the people to seek the examination and pass the exams. Now, due to the COVID, they extended this period for another 6 months. So eventually, until next June, next year, all the appointed people need to have it. Now, if we have a person who wants to be appointed today and they don't have the exam, I assume that it will be okay, will be appointed, and they will be waiting for them to get the exam.
Okay.
Yeah.
Let's move on
Yes, please.
Yeah, go, please.
I will say that a very good stance from CySEC was observed during the COVID, and ESMA also supported this thing where CySEC postponed all the regulatory obligations where we started having them April, May mostly, and now they shift everything 3 months later, which is good because all the firms wanted, first of all, to ensure the of the employees and continued operations where the need for investments during the COVID period was huge. And now, of course, the firms are called to submit and work towards these reporting obligations. We frequently author articles and supporting clients and associate meeting those deadlines because there are a lot. And we know that there is a lot of work to do around this space.
Okay. Mark, I want to move it on to you. Skip boxes here for a moment. So in terms of the FCA, I know that they were talking to, they had a meeting, a circular they had with CFD brokers about some interpretations with MiFID II. So I'm wondering if you can give just a little bit of an update on the latest from the FCA on how they're reviewing and enforcing information from CFD brokers under MiFID.
Like any other regulator, the FCA is a little bit distracted by coronavirus right now. When they're back to full functioning, I expect the first thing they'll do will be to check on people's business continuity plans, because they want to see which firms were able to stand up and carry on operations from home, and which ones found that they just couldn't cope. So I think that's the first thing they'll do. Prior to coronavirus, they were showing a lot more interest in MAR, the market abuse regulation, than in MiFID or EMEA. So there were a lot of queries to clients, queries to regulated firms, and a lot of focus in their MarketWatch newsletter, for example, on people putting something in place, because this is pretty much a forgotten regulation. It came in 2015. A lot of firms had done nothing at all about trading surveillance, and the FCA was trying to get them up the curve on that. Before they started the focus on MAR, they came out with a couple of MarketWatch newsletters, 59 and 62, which focused on the kind of problems they were seeing in people's reporting. There are a couple of things specific to CFD firms. How do you do your monetary price for spread bets? What's the correct price multiplier to use for CFDs and spread bets? But there was also a lot of more generic issues that they were seeing around national identifiers, where people were defaulting to using a concatenated identifier rather than using the ID specific to the nationality. And also people were just getting things wrong about which LEI they put where. You know, they were putting LEIs for the fund rather than the executing firm in the executing entity ID. So there were a lot of little niggles in terms of data quality. The big thing that is coming out is the controls that they expect people to have wrapped around all of their reporting, because there are specific requirements in Article 15 of RTS 22 around end-to-end reconciliation. And there's a requirement that if you have a problem, you need to notify
Mark,
the regulator.
Mark, I apologize for interrupting you. Your audio is going in and out of it. So if you can be closer to the mic or not.
How's that? Is that better?
Yeah, that's a little better.
Okay. So yes, there's a lot of focus now from the FCA on the controls and the wraparound structures that you've got. So people need to think about their periodic testing and data quality issues, and when they hit a problem, they have to let the FCA know very promptly about it. The latest indications from the FCA, although they've given there's been a potential delay on having to do the best execution reporting under MiFID, there is no latitude for not doing daily reporting.
Okay, thanks, Mark. Tom, keeping in the EU, I want to kind of get your feedback on for EMIR refit starting next week and having a bunch of changes for firms. So and I assume most CFD brokers have already been preparing it for it, but if they haven't, what's the items that they really should be preparing at this moment for the refit that's taking place next week?
Yeah, so I mean, the refit has been a bit of a surprise to the repositories themselves. I mean, we all knew the EMIR refit was coming, but this particular legal loophole, I think nobody was quite prepared for. The brokers that use our trade repository are now actively reaching out to their counterparties, to their NFC minus, and asking them reporting. And I think the feedback we're hearing is the reaction is mixed. You know, firms like to, if they've built out all of the reporting infrastructure already, they're ready to go because they remain responsible for the content and the accuracy of the reports. But all of that is going, and it is a bit of a hurdle for the hundreds of counterparties moving all at the same time. So we're trying to coordinate it between all the trade repositories so it happens in a proper and the flavors. So some people want to move their entire history, which means that you have to go through an ESMA mandated porting process, which is detailed and labor intensive because of the old data that came under the various old standards of EMIR. That also firms are just saying, okay, just from a particular day on, I just want my new transactions to be delegated, and my history is going to remain with my old of choice. So we're kind of in the middle of it all. Of course, it's impacted by the wider trends that the panelists talk about. So an impact both on ESMA and the firms themselves, and then the whole CME abide fact because firms are trying to find a home for their reporting there, while at the same time dealing with the NFC minus issue. So lots of space these days.
Is there any, Tom, is there any recommendations you provide to firms in terms of whether it makes sense for the NFC minuses to have to port their information from one trade repository to their broker's repository?
That the safest thing, if you decide to delegate your reporting, is just to go from a particular day forward. You know, the whole tree, it's quite labor intensive, and frankly, there could be some loss of data accuracy because of the different past standards that the trade repositories use. So, I mean, in full transparency, we're also a bit worried about the bandwidth. You know, we have some clients that are talking about hundreds of NFC minuses the weekend. And just to be able to do it all properly and make sure all the T's are crossed and I's are dotted is going to be an operational challenge. So, and probably the more efficient, the better as well.
Okay. Thanks, Tom, for that. Sophie, I want to go back to you, kind of focus on the last thing you mentioned about the 6 months issue in terms of brokers losing their license if they're not activating it. So I've seen, from a little far away, I've seen a couple different trends. Just one of them, if you can comment on, traditionally ASIC has been considered more difficult to get a new license from. Is that changing at all? And also, if firms are not activating it, do they have an option to kind of sell it to other buyers, or is that even also becoming more difficult to do a change of ownership?
Lots of questions there, Ron. So the first question is it difficult to get licenses? We certainly make it quite clear to people that getting a license is particularly difficult. The last license that we got from ASIC, I think it was early 2019, but the years are sort of rolling by. They were a company that had licensing in the UK, and I think part of the success of their application was, first of all, their tenacity, because they waited for 2.5 years for ASIC to approve their application, and the fact that the FCA was able to give some sort of commentary in the background to ASIC about the conduct of the firm. I think it would be near on impossible for somebody to just come out of the woodwork and get an AFSL. But if you were like this firm and you had a well-behaved operation in a respected jurisdiction, I think CySEC and the FCA fall into that category. You'd be able to get a license. In terms of selling licenses or buying a license, that is possible. I mean, we went through a phase where ASIC were being quite difficult about the changing controls, as they call them. In Australia, a changing control doesn't need to be approved, but ASIC, you do have to notify ASIC that there's been a changing control event. So in the past, there was a phase where they made it difficult and asked a lot of questions. So I haven't seen that, so it is still possible. The value of the licenses is up for debate. I think what we're seeing now is that there's not many people left selling. There are a lot of people wanting to buy, but the people wanting to buy aren't attributing the same value that the people wanting to sell are. So yeah, I think there's a gap in the market there, and the people who are left in the market are making decent money and aren't going to sell for the small change that they might have before.
It's probably something that also will figure itself out in terms of the real value over the next year, once there's more clarity on the leverage as well.
Yeah, I think so. And I think, you know, as you probably asked someone else about this, but the news out of the Bahamas last week that licensing is going to have leverage restrictions on it as well. I think we'll probably start seeing a flow back to places like CySEC and ASIC for licensing and onboarding. So I think the value, frankly, is probably only going to go up rather than down from here, despite the hopes of many people of nabbing a bargain.
Okay, thanks for that. Evdokia, I want to go to you. Last year, there was, I know from Cyprus, there was a lot of push a lot of CySEC's focus was on best execution, and they put one of the lengthiest reviews in circulars that I've seen them put out over the last few years that I've been following them. What's the feedback that they've been giving firms? Has there been any enforcement on best execution problems following the review, or is it still in their like the review phase from them?
It is true. And we have this review. Basically, it was released about end of October, November, It was after the many inspections conducted by CySEC. During the last month, as I said, we had a few fines. One of the fine given to a firm who had an administrative fine of about 160,000 euros. And then, and specifically on best execution, among other things, but best execution is one of the most important aspects of investment firms to get a fine. And then we had the two personal fines to individuals where these people were in breach of best execution, among others, of course, and an administrative fine of 350,000 euros and 10 years of prohibition of exercising their activities. As we understand, it's not frequent to give fines, but once they give fines, it's a big issue. And as I see it personally, it is like getting a fine, you are already in a kind of blacklist. So regardless of the amount, it's not about the amount, it's about your practices. And I think impacts the brand overall of the company, the awareness of it. And CySEC, of course, still goes for inspections and they try to do things. On the other side, we have seen many firms calling us to support them on gap analysis, on their process and procedures. Best execution is a very big topic. So many people in the firms, they don't actually know all the areas that they have to touch upon on it, data, procedures, policies. So we're glad to be on that space and helping the firms to improve their practices. But yes, I believe that they will continue doing this. Slowly, everyone will go through this procedure.
Okay, so overall, you're seeing it as an area that CySEC is continuing to kind of focus on, and brokers themselves are kind of increasing their quality and being able to comply to it.
Of course, and we have seen this also on MIFIR and EMIR, where CySEC also issued the thematics review, and they are very, very good reviews for people to analyze it, to go through their practices and what they do. And I'm sure CySEC has the good intention of publishing this, so to help the firms to comply with the regulation.
Okay. I want to move on a little bit to some of the issues now with COVID-19, the coronavirus, and it's kind of made different changes across the industry. Obviously, people working from home. So, Tom, as being part of in UnaVista and being a repository and really seeing all the information that's coming for MiFID and EMIR, I assume you have a good view of seeing where the problems are in terms of transaction reporting. So I was wondering if you could share some feedback on areas where you're seeing companies having challenges and problems in terms of high rejection rates, and anything you can do there would be any feedback you can do there would be very valuable and share to the audience.
Yeah, so it's not like firms are trading new asset classes or instruments they haven't traded before, or trying new strategies they haven't done before. And most happens that we see a spike in actual rejection rates. What we have seen a tremendous spike in, and you guys are all aware of that, is the actual volume. Unfortunately, the rejection rates stay the same, but there's just that much more of these rejections to deal with on day-to-day basis. Operationally, we definitely see an increase in reports that arrive late or reports that need to be corrected, but I think the overall percentage is about the same. What is creaking a little bit is the infrastructure. So in terms to us on time, we had to make some performance improvements. And I can tell you there were a couple of days in March where we kind of regularly sent transactions into that grade from an ARM perspective. But we've definitely invested in infrastructure and kind of tuning of the application to make sure we can handle this. And now the end destination, meaning the regulators, are struggling a little bit. So I can share with you, for example, you know, we have a solution for Bank of Israel's FX instruments, and we're right now working with Bank of Israel because they want to start receiving the transactions in our earlier days. And because of the increase in volume due to COVID-19, you know, their infrastructure struggles to churn through all of this data that they've published to the industry. Now, of course, sending everything an hour earlier has an impact to all the reporting firms because they have to send the data earlier, and validate it earlier, etc. So the whole kind of chain is moving upstream because of that increase in the firms need to deal with. But I think we're largely through that. So you know, we've seen great spikes. Everybody has adjusted. All the business continue. I think we're ready for another set of spikes with much more kind of confidence in the reliability of the overall infrastructure and systems. I think are ready to deal with increased number of rejections. And to be fair, you know, we are seeing a lot more corrections, but again, they're mostly driven by increase. I'll stop there.
Okay. Continue on coronavirus. So Mark, what's your view? I know even before the coronavirus happened, we saw a slowdown of from the FCA in terms of being able to approve new brokers and change ownerships. What's the feedback you're getting now from the FCA? Is it getting even worse, or or things kind of just staying the same?
Well, you're right. We were seeing long lead times for getting authorizations even before coronavirus came in. I don't think we can challenge Sophie's 2.5 years, but it was comfortably taking a year even for a fairly modest authorization of an e-money institution. And we're seeing a slowdown in all of the administrative side of UK authorizations. That extends to sort of the registered individuals. You know, I've seen cases where, you know, 8 weeks after a new compliance officer has joined and the paperwork has been submitted, we've received a letter back saying we haven't been able to allocate you a case officer yet. So there's quite a lot of just slowdown of the mechanics of getting up and authorized in the UK. And it's a moot point how quickly that will recover once the coronavirus is no longer an issue, because I think there's more than just circumstance, there's also a resourcing issue within the FCA.
And in terms of firms that are looking to get authorized in the UK, is it usually just because of opportunistic reasons, or are you also seeing cases where European firms are trying to hedge themselves for Brexit and opening up in the UK as well?
Yeah, there's a couple of cases where people are trying to get a license over here as a Brexit hedge. The Brexit negotiations don't look like they're going well. There's no guarantee at the moment of reciprocity, and I think I was talking with Tom just before we came on about opportunities for UnaVista and indeed for Cappitech and Traction and others from Abide disappearing and the CME trade repository going, and I think it's important that people realise that they shouldn't solve the problem for November, which is when Abide and CME are likely to close the trade repository and ARM. They shouldn't solve for November without also thinking about January, because in January, if we have a hard Brexit, then only a UK-based trade repository will do. So you might as well, when you're thinking, if you're one of the 30% or so reporting firms that used to go through CME, you should be thinking not just about November, but about your options for January too.
Mm-hmm. Okay, thanks. Following on that, Evdokia, so I know on the other side, in terms of where people are doing Brexit hedges, a lot of UK firms have been looking to get set up in Cyprus. In my own kind of like observations, I've noticed a couple firms have gotten them, but they've gone authorized there but haven't opened. So I'm curious to know what's going on there in terms of if if you're still seeing a lot of demand to get authorized in Cyprus, and are the companies that are not open, are they just kind of waiting for Brexit to start before making a decision whether they're going to keep it open or close it?
It's actually quite interesting what's happening the past 1.5 years about this situation. We know that quite a few firms, UK firms, brands, are already got the licenses in the CySEC license. And some of them are looking to acquire existing license, and some of them are still waiting to get their authorization. Our understanding is that CySEC is currently conducting interviews with key stakeholders via online methods, Skype, Zoom, etc., in order to get not to delay the activation process. However, there are many firms actually facing their own internal issues and in completing the authorization process, so they requested extensions from CySEC. Overall, I wouldn't say that there is a quite delay on getting licenses, because during 2018 we had only 8 licenses from CySEC, and until today, 2020, we have 4. And I know quite few, they are waiting their license. I will say that maybe in 2 months or 3, we'll have exceed the 2019 authorizations. Many of them are from UK coming in. There is a lot of demand to acquire an existing license. However, there are not a lot in the market. So it can be quicker now to get a new license.
Okay. Sophie, I want to, in terms of, because I know there's a few different hedges going on in Europe in terms of either because of Brexit or for leverage. In terms of Australian brokers, in the case that ASIC does lower leverages, what are the hedge areas that firms are looking to kind of like to get licensed into to move clients to?
You mean the offshore licenses?
Yeah, offshore, I don't know, lightly regulated, whatever you want to call it.
Yeah. So the ones we're seeing are sort of the ones that are closely situated to where we are. So Vanuatu is a very popular one. We're still seeing a lot of Mauritius, and then Bahamas was quite popular up until the other day. I think there might be some change there. And you do see the Cayman Islands, St. Vincent's and the Grenadines. We don't specialize in offshore licensing. I'm not sure if Evdokia does that, but we certainly say our view is that if you're getting licenses, you should get as many as you can, because they will topple over one by one over the next little while.
Mm-hmm. Okay. And in terms of just going back to the importance of an Australian license, one thing that I noticed is that there's a few firms that have been, I'm not sure if this is ESMA related, but they've been moving their kind of like the entity that's the final entity for their flow, like the warehouse entity, to their Australian entity. Are there benefits for doing that, or is it maybe just like technical reasons that it makes it easier to move things over there?
I think what people are trying to achieve is that they can tell their clients that the client money is held in Australia. There are some obvious flaws with that representation that people make, because the client money really has actually then become money of the offshore entity that's being used as margin or collateral for those hedge trades from the offshore entity to ASIC, whether that's back to back or on some sort of B-book kind of arrangement. So yeah, that's the reason, and they might also even be using the Australian bank accounts to accept the client deposits in the first place, which creates this illusion, particularly for some of the Asian clients that aren't so sophisticated, or any retail client that's not particularly sophisticated, thinking that they're sending their money to Australia and they're getting the benefits of Australian protection when they're really not.
Okay. I want to just remind the audience, if anyone has any questions for the panelists, please, you can enter them in the Q&A pane. And also, if we're not able to get them during the panel, they'll also be digitally available that they could be answers as well. Tom, I want to move back to you. There's a lot of, when we talk about MiFID, MiFID II reporting and feedback, a lot of it is information that the FCA has been made public. But you don't hear that much from other NCAs across Europe. You might hear a little bit about just, in terms of lateness and, that they're monitoring how often things are being reported, but it's not that, it doesn't hit the headlines as much. So I'm wondering if you could provide some feedback in information that you're getting back from FCA, from other NCAs, as far as how they're looking at the data quality of MiFID II.
Sure. So actually, that's quite a topical question. We embarked on a tour of the other European regulators we connect to, and there's some 23 of them. Of course, we didn't see all of them, but I think we saw the majority. Clear that now, especially for MiFID, we're now in year 3 after the regulation go live, and the focus has very much shifted from everybody's reporting, and now on to the data quality type of issues that you mentioned. So we are seeing a spike in what we call replays, or kind of bulk re-reporting of transactions that have been reporting in the past, tail end of all the NCA activities. And majority of the NCAs use the language that says, you're responsible for data, identify data quality issues. We will ask you to fix them, but we're going to be lenient and understanding. If we, as the NCA, identify data quality to fix them, but we're not going to be understanding, and we're going to be quite prescriptive around the time and the remediation that you need to have. So the NCA has been that time is now to look at the actual content. They view data quality as paramount because they use that their mandate of supervising the markets and make sure that they're fair and they're not abused. So there's definitely a shift in language and attitude. Expected to have systems and controls in place. Firms are expected to have analytics in place to be able to monitor trends and patterns in the issues proactively. And certainly firms are expected to fix anything that was misreported, no matter how substantial the errors might have been. So again, from some of the bigger brokers, we're selling millions and millions of transactions, and we reported probably over the last year or so. The trend doesn't seem to lessen in any way. Technology is an answer to a lot of that. So we at UnaVista have launched a set of kind of data quality analytical terms. All of our partners, like firms here, are developing tools that allow firms to have a better handle on the content that they're doing, and it describes the business activity that they have conducted. So I think this is a good opportunity. It's always cheaper capabilities from a vendor than it is to build it in-house. So for us as like a mini industry of regulatory reporting providers, this focus on data quality is actually good. And we're developing tools to allow firms to meet that obligation, with some degree of risk reduction and certainty of outcomes.
Okay, thanks for that. So overall, you're saying that even if the other NCAs have been a little slower, everybody is reviewing data quality, so people should be kind of making sure that they are doing things correct. Because if they haven't gotten a letter yet, they will be. I should probably mention,
and the other thing I should mention, and Mark just reminded me of it, is how you can Brexit. There is also a large impact of Brexit of data quality, especially if you're trading on venues. So if you are trading as from where you're registered, it's likely that that venue is going to have to transaction report on your behalf now, because you're going to be a non-MiFID firm. And then that venue will ask you to supply the data to the venue so that the venue can do their job of reporting on your behalf. in place and make sure all of those systems and entities are set up and connections are made, et cetera, is also a huge undertaking. We've had a few Brexit, so I think this is our fourth goal of getting all this infrastructure in place. But certainly firms need to think about where they want to go in the event of hard Brexit.
Okay, thanks for that. I think we're running out of time right now. So if anyone has any questions, again, please put them into the Q&A. At the moment, I'm not seeing any, so I'll ask a quick last question to everybody. You can make it very short. What's the top item you guys are working on right now? So Sophie, start with you.
Main one on the traction side is the closure of CME. So there's a big movement of clients away from the CME to other trade reporting options. On the Sophie Grace side, our major focus is currently on auditing and client money, and yeah, the maintenance of licensing for the people who still have theirs.
Okay. Mark?
Yeah, well, like Sophie, I'm getting a lot of calls from former clients from when I was at Abide saying, what do we do now? So I'm trying to sort those out. I'm also involved with a number of crypto firms because the fifth money laundering directive requirements came in January. People in the UK have to register sometime soon in order to have their registration in place by next January. But what a lot of crypto firms are overlooking is that they should already have had controls in place from January of this year to conform with the AML controls required under 5MLD. Now, all of the currently regulated firms are very familiar with this. It involves know your customer checks and transaction monitoring, and also being able to submit suspicious activity reports. For crypto firms, you have to go the extra step of being able to use blockchain monitoring software to look at which crypto addresses your transactions came from and where they're being sent to, and to use the software that's available to establish the reputation of those external addresses. So working with a few crypto firms on those issues.
Evdokia?
Our main projects and requests actually currently is AML examinations, where in June examinations started again, and we have a lot of demand from people need preparation, and we try to host every month a seminar. We also launch online our seminars through the Institute for Professional Excellence. And it's overwhelming and very nice to see people interested about this. And then we have also meeting the regulatory obligations, the annual ones, where they extended in June, July. So we are happy on that front.
Okay, and Tom?
Yeah, I mean, keeping in theme, I think the CME Abide thing is probably the most pressing thing right now. So we're both RFPs, RFIs, demos, just inquiries about services we provide for firms that are trying to find a new home. And just as important, working with the third-party providers who are trying to find a new home. So firms that have been providing reporting services on behalf of firms trying to find a new destination trade repository, we're of course engaged with those and coming up with models that will work. There's clearly a bit of models are best based on the outcome of the whole Abide CME thing. So we're trying to kind of calibrate it and come up with the right commercials, make everybody's happy and it's a sustainable model going forward.
Okay. So we had a open question here. I think to Mark, this to you. So you mentioned about if you're doing blockchain, you have to have monitoring software for the addresses. So the question was about the crypto addresses. So how do companies with the software, do they guarantee that addresses are reputable or not related to anything bad happening. I guess the question is like, how do you know that software is actually checking whether it's a good person to receive funds from or not?
Victor actually had a couple of questions. I said I'd answer the other one live. He was asking, how do you make offshore companies come, or traffic that goes to offshore companies come back to the EU, and how do you differentiate yourself? The answer to that, the answer to the two is the same. It's based on quality. It's based on, you want to get the protections of proper client money protection and so on. So I think that establishing in a properly regulated environment helps to pull the things back, especially when, if you're going for 100 times leverage in the Seychelles and you find that you're being liquidated by spurious spikes, over time people will realize that they don't want to throw their money at an unregulated entity, and they'll come back. Victor's other question about what do you do about crypto addresses, the answer to that is really that crypto addresses are only pseudonymous. They're not completely anonymous. And because most of the blockchain is completely visible and there's a permanent record of it, you can follow the breadcrumbs and see where the thing ends up. And you can see whether the addresses that you're interacting with are used for terrorist financing or whether they're associated with the darknet. There are a number of tools like elliptic and chainalysis that actually establish the reputation and give a score to the addresses that you're interacting with. So regulators will expect under the AML regulations that firms are making some use of those blockchain monitoring tools.
Okay. All right. Thanks, everybody. I don't want to see any new questions here. So Sophie, Mark, Evdokia, Tom, I really want to thank you for participating in the panel today. And again, I want to say thank you to the Virtual Finance for having everybody here and giving us the opportunity.
Thank you.
It was our pleasure.